Okay, so pre-US market analysis. The US dollar has been melting to the downside, and the question is, at this point, has it come down far enough? So only time will tell, but it's already made a 50% weekly retracement. And across the pairs, it's moving into critical territories, resistance. So we've got this interrupting candle here, which is a volume area. But with that being said, there's been no real sign of deceleration. But we may see that in today's session, midweek and Thursday, for a return higher. In any case, in any further continuation, we will have this M formation in place, which is a reversion pattern. With a expected correction into this old area of support, which will be expected to turn resistance on the DXY. On an hourly time frame, we've got this shark pattern, so which is essentially the reinforcing the bullish outlook from support. So there's a little bit of room left to go to the downside, but from an hourly basis, let's have a look. If we get a move up on the hourly, if we get a sharp move up, this would likely be a bottom that's forming. These wicks are very indecisive following this sharp move down, up. Looks pretty consolidative to me at this point, but that's not to say that it can't continue lower. Okay, so that's the dollar. That's the dollar, and to me that signifies for the New York Open that if we are at potential extremes in, say, the euro, cable, commodities, then we could see a sharp move to the upside in the dollar versus those pairs for shorting in the open. And moving over to US yields, if these are anything to go by, then we're getting the same outlook in yields, come into support. We're getting a move up, basement. We've had 1, 2, 3 pushes into the low on the hourly chart, which indicates a move higher, which should be supportive of the US dollar for the New York Open, potentially giving us opportunities to short the euro, cable, Aussie, Kiwi, keep buying dollar yen, etc. So on the pairs, starting with the Aussie, then we've had the RBA hiking interest rates by 25 basis points, but pointing to a slower approach. Lowe said that they've already hiked steeply and fast enough, so this has put an offer into the Aussie. It came down into the 50 level, and it's continuing now to melt after this sort of mitigation of price imbalance since the announcements. catching people off guard that were trying to short it too low down into support. So we've got this harmonic pattern taking shape. Maybe we could have another move to the upside before down. Yeah, not sure about this one. Let's have a look. So we've got this. I mean, if the theory about the US dollar is correct, that we're going to see some upside today, then, as I said, there's still a little bit of downside for it to go. But what we could be looking for a little bit of a pop up, perhaps, and a pop down. I mean, if this is the peak formation that's in place at these resistances, we're now on day 2, so this could be the high for the week. We've certainly had the 1, 2, 3 up, and we're in need of a move down, so worth keeping this on the radar for today. We'll have the same scenario for the Kiwi. Got exactly the same formation really here. On the euro, it broke last week's high. So this will be pulling in. This will be pulling in breakout traders. We're heading up into the first quarter of the 99 handle, so this could be the potential for a peak formation or a short into the US session to test the low of the week that was made at yesterday. So I'm putting that up there to remind me that not to chase the good-looking chick and expect a short to the downside. It's already pierced this broadening formation's potential resistance. So we stick a trend line on that. We mark up our structure, which would be over here. So looking to sell on a move below. On a lower time frame, yeah, and we've got this crab bearish harmonic pattern. We've got this 15-minute W formation bearish for a retest of the neckline. So we'll give this a important spot on the charts for a sell below. And then even lower. So we're breaking up. So 1, 2, 3 down. And then we've got this M formation in place here. So 99.10, this over here. So I'd like to see a pin and then a drop to signify that we're heading lower, potentially for a really significant move. Where do we have that low for the week so far? So 97.50. Not sure that we get there today without any catalyst really, but could be looking for 98.50 over here. Say we don't quite get the highs, maybe in here, 50 pips. Dollar CAD wants to be going higher. Now on the hourly time frame, we are sort of testing this resistance. And we've left this W formation in play, which could be signifying move into the neckline. On the daily chart, it's had this strong rejection, so that is not bullish at last week's highs. So looking for a continuation into last week's lows to mitigate this price imbalance. And if the price cannot exceed up into this area of imbalance, then we're looking lower. So we've got a potential 50 pip move to mitigate this price imbalance for the day ahead if this peaks out at this resistance. For a 62% retracement. On the 15-minute chart, this is 1, 2, 3 pushes, looking for a peak formation and opportunities to short. On the 5-minute, we've got the first structure at 136.50, and on the 1-minute, we're coming down to retest the top of this flag, which could lead to a potential M formation top. If not, then we've got 1, 2, 3 reasons to be looking to short. Over here, here, and here. There, there, and now here. Break of structure would be the trigger to look for a move into $136.20. Got this sort of build up of price over here. Now with gold, we've had a strong move to the upside. This harmonic crab formation. On the weekly chart, we've come in to test the neckline very sharply of this M formation. Taking out resistances. Let's clean up this chart. So the question is whether we're heading up to last week's high. But this is certainly a area where we would expect to see some deceleration of this rally. In what has been a 78.6 fib retracement. However, there's no sign, there's no let up here currently, which is interesting considering US yields are trying to rebound. Let's have a look at those. Okay, so we might have a bit of delay here. Yeah, we really want to see bonds fall off to see this yield pick up, breaking the trend line, stalling gold's advance into the 78.6. However, we've got this M formation, so this could be a little while longer before we get that, but we'll have to wait and see. So you've got the W formation coming in. Any move higher, such as this, coming up to resistance to move back in before the exit out of this accumulation or lower down accumulation. So we're still bullish on gold, really. This can go a little bit higher. For a move into 117.20, I expect. On the yen, I highlighted the potential for a move into the neckline of this W formation, which we've seen, and it's seen a rejection at the neckline. This came into here and held. We're sat in between yesterday's high and low. So we're looking for a break of yesterday's high. Last week's high. Yesterday's high is here. A break and close above last week's high for a move up into last month's high. So last week's high being the line in the sand. We've got this accumulation between this neckline of this W and those highs. And a similar scenario for cable. This trend is petering out and the focus really is on the downside. We've got this hourly pin. We could be coming up for a final retest of the highs for a peak formation to go lower.